So the last part we're doing is the actual analysis of the financial statements, and I'm starting with the profit and loss statement where we had a loss of $950. Okay, so we're looking at the return on sales, and because of the loss, the business it cost the business $1.09, or should I say $1.10 to generate $1 profit. Okay, that's why they had a loss, because they were spending more than they were actually earning. Okay, so that's what it tells you. They were actually costing the business $1.10 just to earn $1 profit. Here it showed you that the cost of goods sold here is 61% of the total money that was earned, which left gross profit with only 39% as profit before you cover your operating expenditure. And note that your operating expenditure was 48% of your sales. So if cost of goods sold is 61 and the operating expenses, if I round off, was 49%, that shows you right there that you actually had more expenditure than income. Okay, well, this is the first year of business. Let's look and see how the balance sheet is doing. In the balance sheet, the current assets surpass the current liabilities by almost double, which is good. You just want to make sure you have enough current assets to cover your current obligations. Your current assets were $8,650 and your current obligations were $4,600. You don't need to use your fixed assets to pay off your current obligations. And the amount of debt they have isn't very high. It's only 34% of their assets were financed by debt, so that's also good. And the amount of times they actually got inventory and sold it for that 1 month period was 59 times. 5,900 represents cost of goods sold, which we got from the profit and loss statement. Let me show you quickly. Right, so the cost of items sold, and we're dividing it by how much we have remaining on stock, which is the 100 here. All right, so that means every time they purchase stock, most of the times they sold it. However, because they made a loss, the assets weren't very efficient in bringing in profit. Okay, that's why there's a negative figure here. But overall, the business doesn't seem to be doing too bad. The only shortfall is that they're not making a profit.